The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to this Friday edition of Squawk Box with Juliana Tauderbaum, and I'm here to help her, Steve Sedgwick as well. These are your headlines. Oh dear, it all seems to have gone a little bit wrong, and this time the subject was the legacy of Reagan, I think, really. Another salvo in President Trump's global trade war. He's halted all talks with Canada over a government ad campaign in Canada, which uses Ronald Reagan to criticize his tariff policies. Juliana.
European leaders failed to reach an agreement on using frozen Russian assets to further back Ukraine. That Commission President Ursula von der Leyen says the EU will continue to ramp up pressure on Russia.
We will keep up pressure on Russia for as long as it takes, just as we've always said that we will stand by Ukraine for as long as it takes to secure an end to the killing and a just and lasting peace.
And Chinese and Indian state-backed firms reportedly rethink Russian oil purchases in the wake of new U.S. sanctions. The U.S. ambassador to the EU tells CNBC President Trump wants to see the war in Ukraine end.
We need to step it up. We're willing to step it up. And, hopefully Vladimir Putin will get the message and understand that the war needs to come to an end.
Good morning. How are you?
Morning. Yeah, doing well. Happy Friday.
Happy Friday for you. You haven't got another day with me for another week. You got a whole week off.
I've only had 2 days of you, though, this week.
I know.
So
I'm sorry about that.
In
The
moderation.
producers gave you 2 days too many. Look, the numbers are great over at NatWest, apart from the fact that they've all in that industry got this motor loans claims issue going on. And if you look at NatWest shares, which are one of the biggest banks, obviously, in the United Kingdom, they have had a brilliant run to the upside. In fact, the one-year chart shows them going from 361 pence. That chart really typifies, though, 35% higher this year. We have seen a stunning re-rating of European banks. This one's got a price to book of over 1 now, 1.1, when you really could find this bank at its lows for around about half of that, if not less. So the numbers today are pretty solid as well. Net interest income in the third quarter, £3.3 billion. Total income, £4.3 billion. Operating profit before tax, £2.18 billion. They have upgraded their income and returns guidance for 2025. And there's a lovely big fat return on tangible equity there, the so-called ROTE, of greater than 18% expected for 2025. But, and there is just a little but at the moment, which hasn't really dented the share price that much. It's been a bugbear for the sector, which has got to pay billions in compensation for missold loan compensation. Basically, they didn't tell the customers who were taking out these loans, none of the auto, that there was a commission being paid along the line somewhere as well. So we'll monitor and react to market conditions and refine internal forecasts as economic position evolves as well. I haven't seen a line just yet on the auto loans. I'm sure there's one in there somewhere.
Well, just as we look out for a line on the auto loans, just as a reminder for context, I think for this bank, this is a bank that has been on a journey of simplification. They've been trying to simplify the bank. They want to become a technology-driven bank. A line we hear from banks across the sector. We are going to hear more in terms of their medium long-term targets in February. They're going to introduce 2026 and new targets for 2028 in February 13th, 2026. So a few months away, we're going to get a little bit more long-term color from the company. But this is clearly a decent set of results. And in terms of assets under management, some good news there for the bank, up 8%, growing strongly over the course of the quarter. Strong client net inflows, the bank says. I mean,
I'm just trying to really find some more copy on this one as well. We know that some of the biggest banks that have been affected by this, Barclays, Lloyds, it's been across the board. There's been concern about this as well. But I haven't seen it. Again, it'd be very interesting to see how that evolves on the auto loan issue.
I think looking at the interim report, when you search the word auto, nothing comes up. So no. I'm not sure if they do have a.
So maybe NatWest is not as badly affected as the likes of Lloyds as well, but certainly something that's dented other parts of the sector. Mr. Trump,
He's been busy. When isn't he busy?
Oh, it's phenomenal. I mean, let's be honest about it. We were worried about energy levels of both presidents, Mr. Biden and Mr. Trump, before the election. Obviously, well-grounded fears about the energy levels and cognizance of President Biden. People worried it'd be the same for Mr. Trump, but he is a very busy, proactive president.
I think whether you like his policies or not, you cannot deny his energy levels are extraordinary. Let's get to our top story. President Trump said he's immediately terminating all U.S. trade negotiations with Canada after the Ontario provincial government aired an advert featuring former President Ronald Reagan talking negatively about tariffs. Taking to his Truth social media platform, the president accused Canada of trying to interfere with the decision of the Supreme Court on the legality of his tariffs and called the advert fake, but did not supply any evidence. The advert in question uses a clip from a 1987 radio address by the former president in which he warned high tariffs inevitably lead to retaliation by foreign countries. White House Secretary Caroline Leavitt confirmed that President Trump will meet his Chinese counterpart Xi Jinping next Thursday morning after addressing the APEC CEO summit in South Korea. This as investors eye the November 1st deadline for a new round of tariffs.
So two things. One, I'm still here, and NatWest is not exposed to the motor finance market. I'll just get that one out and done with. So
That's why it's not in
clarified
the
there as well. Lloyd's badly hit, NatWest not exposed according to what I've seen. So, right, okay, so on to this as well. That clip is not the only clip about Trump Reagan talking about tariffs as well. And we would just listen to it again before the show, and it's talking about how Mr. Reagan in 1987 vehemently against tariffs, making the comparison to the concerns and the depth of the crisis in the Depression in the 1930s, and adding that heavy tariffs made that worse. And the 1930s is very apt because a lot of our commentators and economists on this channel have made the point that actually the tariff levels in the United States now are comparable to the levels we saw in the 1930s. Ronnie Reagan at the time is saying, look, I'm going to have to put some semiconductor tariffs on for the Japanese manufacturers because this is one area where we do believe we have to have more cooperation from the Japanese, and that's what he did in 87. But he was making the point vehemently, he does not like tariffs. And I've used it when I've been talking previously as well. But Mr. Trump getting upset about it. In fact, the Ronald Reagan Foundation saying it misrepresents the audio address. Personally, I think it's unambiguous. Please, all of you actually, do some homework while you're watching Squawk Box. Dig it out. Just Google or whatever.
Maybe during a break.
Or during a break, yeah. Or maybe during another show, because, you know. But just have a look at it. What Reagan is saying on tariffs in 1987. I think it's unambiguous. So, but again, going back to 2025, why is Trump so? You know, he's doing incredibly well on many issues. I don't understand why he's so thin-skinned on this one issue. Yeah. Doug Ford has really put, because it wasn't actually Carney's government who did it. I think it was Ontario that put this out.
Yeah.
And Doug Ford, we know, loves a battle. Mr. Trump loves a battle. They love going toe-to-toe with each other. They are big, big characters. I can't understand why the whole trade conversation has hit a wall on the back of one ad campaign.
Yeah, no, I thought I had the same question. You know, what is it about this ad that has gotten underneath President Trump's skin so much? So I watched the ad this morning, and it's actually quite civil. When you think about something that might have really irked President Trump, you might think it's really controversial. But when you listen to it, it's actually quite civil, which I think may be the problem. Here you have Ronald Reagan.
Would you say it's very Canadian, very civil?
Yeah, it is. It's very civil and it's very sensible. It comes across really sensibly, which I think therein lies the problem, that Ronald Reagan is an icon for the Republican Party. And if you have an icon speaking quite sensibly, negatively talking quite sensibly about President Trump's tariffs, then the impact that could have could arguably be greater than if it were some sort of outlandish, controversial take. So I think the civility of it is actually part of the problem here.
Yeah, I can't dispute any of what you just said. I can't really add to anything either. I think it's I like a lot of people. I lionize Ronald Reagan in many, many ways, and many of his policies as well. And I can't see the problem here as well.
I think that's the problem, that a lot of people do. A lot of Republicans do really love Ronald Reagan. They think of him as an iconic president. So here you have him out there.
After the chaos of the 1970s, to be fair, vodka wasn't Reagan's pick, which is always the thing I always find very fascinating. It was Mr. Carter's pick, President Carter's pick as well. So vodka came in actually on Carter's watch, but obviously what he did was mostly effective in the 1980s. Look, Thatcher, Reagan, a lot of people are harking back. Do you know, in this country as well, the most popular prime minister post-war, or certainly in the last 50 years, is coming up as Margaret Thatcher, even for people who never lived under a Margaret Thatcher as well, because of what she represented, rather than potentially of how divisive she was at the time as well. And so people are harking back to a time where you had strong leaders, clear policies, and strong economic results.
Yeah, so Ronald Reagan's impact, his legacy living on beyond him, and fascinating to think that President Trump sees him as a potential threat, even though this is just, this is voice clips from many years ago. In terms of where this goes next, just one thing to flag for viewers, we are expecting President Trump to meet with his Canadian counterpart, or they're likely to see each other anyway next week, because both leaders are heading to Asia for these key summits. So we certainly could get more on this story in the next couple of weeks.
Anyway, please dig out that Ronnie Reagan speech. I thought it was fantastic, what he's saying, and stunningly sensible. But I challenge a lot of you to disagree. In fact, here's my email address, steve.sedgwick@cnbc.com, steve.sedgwick@cnbc.com. Have a look and tell me what you think, or if you already know what it says in it, tell me what you think. And if you disagree, by all means, disagree. Do it politely and I'll read your email out. OK, EU leaders have vowed to continue financially supporting Ukraine in its fight against Russia, but the agreement came short of endorsing a plan to further use Russian frozen assets. It comes after Belgium raised concerns over the funding, with the Prime Minister asking for strong assurances that the plan was legal and risks could be shared between member states. Belgium's support was key in the plan. The country's financial institution, Euroclear, holds the majority of the assets that could be used to fund the loan to Kyiv. Right, speaking to reporters, the Belgian Prime Minister, Bart de Wever, raised questions over the proposal.
It's a first. We're in uncharted waters. Is it legal? Is it not legal? That's the very first question. What is the legal basis to do this? It is unclear. It's a matter that needs to be solved. Before we can go forward on this, I think everybody would sleep better if we would know that the legality of it is underpinned. We will, in any case, be buried in litigation. That seems like a certainty. I don't think that Russia will take this in a nice way.
Speaking after the summit, the EU's Commission President Ursula von der Leyen said the bloc will ensure the process would be legal.
We will keep up pressure on Russia for as long as it takes, just as we've always said that we will stand by Ukraine for as long as it takes to secure an end to the killing and a just and lasting peace. This was also today our message to President Zelensky. We had a good discussion on the reparations loan to be financed with the immobilized Russian assets, and it allowed us to identify points we still need to clarify, and then indeed we will come back with the different options that we will develop. Let me underline again, we will always respect European and international law while we are taking this work forward.
Meanwhile, the Ukrainian President Volodymyr Zelensky urged EU leaders to approve the loan quickly.
Russia brought war to our land, and they have to pay for this war. In any case, one of the ways to pressure on them, and by the way, they're afraid very much, that Europe will make this union decision. And of course, one of the way is to use frozen assets. And between us, not only on humanitarian things. Yes, because they attack us. We need to defend and answer. If we don't want to give them possibility to win, I hope that they will make political decision, positive decision in one or another way to help Ukraine with funds, yes, basing on frozen assets. And of course, this is a big deal.
Silvia Amaro, I watched your show. I loved your show. I watched your interview with the Latvian foreign minister as well. And I watched your probing of it as well. And you were asking exactly the things that I was asking in my head. And that is this, well, let me put it in my words. This is a pig's ear. What an absolute mess. We knew about Brussels' complaints and concerns. We knew that the Belgians wanted assurances. We knew that they were going to be reticent on this one as well. How can we get to the stage where we're voting on this frozen asset usage and walk out the other side and not have a definitive answer as well? What an absolute mess, I think.
and we still don't know when we might get an answer. So let me just bring our viewers up to speed with what happened over the past 24 hours and also provide a little bit of context on why this discussion is so important. So the EU has already been using the windfall profits from the frozen Russian assets that are on the European continent as a way to support Ukraine. But two things have happened over the past year. We are now dealing with lower interest rates, and on top of that, you have the fact that the US has reduced its support to Ukraine as well. So that means that there's more pressure on the EU to come up with further funding for Ukraine. So they're looking at alternatives. Where can they find this cash? And a lot of member states are saying, okay, let's use more of the frozen Russian assets on the continent to make sure that we can continue to support Ukraine without actually destabilizing our finances significantly. The problem here is that Belgium is the country that is ultimately holding the majority of these assets, is concerned about legal and financial risks in the future. So the Prime Minister of Belgium said yesterday at his arrival at the summit that he wants to see full mutualization of the risk. So he wants every single country in the EU to say yes, they will step in case there's problems in the future. He wants every country to also chip in case the guarantees of the money need to be paid back to Russia in the future. And last but not least, he also wants other European countries that have also frozen Russian assets on their territory to say that they are also embracing this new measure of using the frozen assets even further this time around for reparation loans. So there's a lot of technical details that the European Commission needs to work out. But long story short, ultimately what Belgium wants, it's risk sharing. For the time being, we don't have that. The European leaders didn't manage to agree on that late last night. So let's see whether they will manage to find a compromise over the coming months. The ultimate date that we are now expecting is that they will come back to this discussion in December. That's on the frozen Russian assets, but we can't ignore what's happened on the sanction front as well. Yesterday, I had a chance to sit down with the US ambassador to the EU. He's been in the post for just 2 months now. And he actually told me that the United States, that now has imposed new sanctions on Russian oil companies, could go further if Russia doesn't get the message. Listen in.
President Trump has been adamant that he wants to see this war end. And not only this war, but these many other wars and conflicts that he's ended. This is something that's very near and dear to him and very important to him. And you'd have to say that Vladimir Putin was not particularly responsive to his peace efforts over the past couple of weeks, which I think would be very disappointing to the president. The president's a very experienced negotiator. He's not going to get discouraged. But when you see that negotiations aren't going the way you want them to go, you need to ramp up the pressure. And I think with the 19th package coming out of the EU, almost simultaneously with Secretary Bessent increasing the sanctions. I think these are the first times we've imposed sanctions under President Trump. And they're extensive on Rosneft and Lukoil. And I think it's an indication that we need to step it up. We're willing to step it up. And hopefully Vladimir Putin will get the message and understand that the war needs to come to an end. He doesn't seem to have gotten that message yet, but hopefully this will bring it home.
So if he doesn't understand the message from the United States, are you prepared to do even more?
I assume that we would do more. You're not going to see, I don't think you're going to see American troops in Ukraine in anytime soon, if at all. But I think that the president will continue to ramp up the pressure until Russia realizes this war is not in its best interest. I think most of the indications coming out of Russia are that people are lined up at gas stations. The economy is not doing well. Inflation is out of control. They've got support from the Chinese, which is unfortunate. I think if they didn't have that support, we'd be a lot closer to a resolution. I wish the Chinese would stop that. But I think the United States and Europe will continue to ramp up pressure until the Russians realize that the war is no longer something that is going very well for them. They seem to be at a stalemate on the battlefield, and but the Russians continue to pour money into this, and arms into this, and lives into this, their own people. At some point, that needs to come to an end, and hopefully, these sanctions will bring home the fact that it's time.
So just to wrap it up, leaders had the chance to discuss several topics last night. I could show you the amount of pages that we obtained from the leaders in terms of their conversations on competitiveness, on the Middle East, but we knew there was one key point for them, one key challenge at this summit was agreeing on how to use the frozen Russian assets even further to support Ukraine. And ultimately, when it came to that challenge, they did not manage to overcome it.
Sylvia, thank you for getting right to the heart of the matter for us. We appreciate the coverage from Brussels this morning. Coming up on the show, we've got lots to cover on Ukraine, Russian sanctions, and the meeting between Trump and Xi. We'll bring you the latest. Plus, it's a busy day for data, with UK retail sales rising by 1.5% on the year as consumers prove resilient. Later on, we'll get fresh PMI reads for the UK and Eurozone, and we'll get U.S. inflation numbers out later today despite the shutdown. We'll discuss the outlook with George Brown, a senior economist at Schroders, at 9 a.m. BST.
Welcome back. Take a look at gold and silver. Gold just doesn't want to give up 4,000, does it? I think everyone was looking at that level a couple of days ago. Then it had its rally. Now it's giving back a little bit of ground in the session, down about 1% as well. But it is set, would you believe, to break a 9-week streak. Its worst weekly performance since August. But quite frankly, I mean, it's had an amazing run to the upside. At the moment, down a couple of percent for the week as well. Silver was an interesting one. It's one I've been following for quite a while and just keeping an eye on it as well. Down 2.8% for the week before today's move. So, yeah, down over 3, nearly 4% there you can see on the silver prop. It says down 2.8% as well, but I think it's down a little bit more than that week to date as well. Again, having its worst weekly performance since the start of August. But quite frankly, it's had a stunning run to the upside, which has benefited Pan African Resources, which is a South African gold producer, moving from the alternative investment market to the main board of London Stock Exchange. The move will make it the first gold miner to join the main board since Endeavour in 2021. Well, Julian and I are delighted to welcome around the set Cobus Lutz, who is the CEO of Pan African Resources. Cobus, what a moment for you guys in your business and indeed, you know, your move to the main market. Why don't we start from the main market a bit first of all? Why is that such a good move for you?
It's an exciting time, as you've said. We've been on AIM since the early 2000s. And we've managed to grow the business quite materially over the last years. Obviously, the gold price is definitely giving us great tailwinds also. So it seemed like the right thing to do for us to move up, exposure to more investors, more liquidity. And we think we have a place to fill in the London market.
Yeah, there's a lot of questions about the London market at the moment, about the costs of listing on the London market, about the pool of liquidity, and indeed about the role of basic resources more generally. It has been such a mainstay, oil and gas and basic resources for the London market, such an important bulwark as well. You still think London's where it's at?
Well, certainly there are challenges in this market as there would be anywhere else. For the likes of Pan-African, we've always found the London market to be supportive. Our investor base here has done very well out of Pan-African in terms of the stock, and we think they'll continue to do so. I mean, we're growing production in the next year by 30 or 40%. Obviously, as I've said, we have the gold price that's giving us a massive boost. So it's a good time for us to be here.
Oh, sorry, that's huge. You're growing your production 30 to 40% in the next year.
100%.
No, 30 to 40%.
Yes,
you said.
yes.
Sorry, I'm being pedantic. I'm fucking around. But that's an amazing thing. Can supply actually respond as aggressively as you across the board? Because If it is, then that's a lot more gold than some of the bulls tell me is available to go back onto the market with this higher price.
Generally, no. The majors can't grow production like we can. And that's one of the benefits of Pan-African, as we're a bit smaller. But, we've delivered 2 new projects in the last year, and growth is banked. So now it's sitting back and just seeing these projects deliver.
What's your take on what's underpinned the gold price rally here? I'm just keen to get what you think has been going on.
Well, I think for us, we obviously are biased, but it's been
not as biased as the World Gold Council, I reckon.
Well,
with their Elton John adverts.
That's debatable, but yes, it's been a long time coming for us. I think the themes are, as has been well articulated, move away from the dollar. Concerns around global stability, and all of these things are providing an underpin.
There's certainly a lot of people who are concerned that the rally we've seen doesn't match the fundamentals, and that it doesn't make sense given what else is going on in the market. And just in the last week, we've seen the gold price come off. When it comes to your company, you clearly benefited significantly from the higher gold price. Will your earnings be impacted to the same degree on the way down as they were on the way up?
Well, we have the benefit of being a low-cost producer. A $4,000 gold price is fantastic, but we don't need a $4,000 gold price to do really well. Our all-in cost of production is around $1,500, and as I've said, we're growing production materially. So that certainly will be reflected in the earnings going forward.
How does that compare to your competitors?
Well, there's very few companies that can grow production to the extent that we have. We've brought these projects online, just with perfect timing. It's obviously been... I would love to claim foresight, but it's luck, and you need a bit of luck in any game.
Yeah, it's amazing, Cobus, and this is your business, but something I've looked at for a long time. I remember the big debate when we were about $1,000 a troy ounce about whether it was even worth getting the product out of the ground, because the cost of production was... Well, then I remember an $800-900 a troy ounce figure, and we were very, very close to that. So this rally has been quite extraordinary. Back to the fundamentals as well. I've no doubt that there are longer-term fundamentals that support the value of gold and support owning gold as a hedge against all kinds of other crazy things going on in the world as well. But back to Juliana's point, do you see any catalyst in the very short term, at the same time that share price, that price of gold has gone through the roof, that is different from what was there before? Because that's where I'm really struggling.
Sure.
The long-term benefits of owning gold, I get, but I see no reason particularly why we've had this aggressive rally so far this year.
Yeah, it's an interesting question. Gold, in my assessment, is money. That's really what it is. It's a currency, and the Asian markets have. You have to look at the demand and just obviously the recent listings in Hong Kong. There's huge demand for gold. I think the European and Western markets are only just waking up to that fact, and most investors are still massively underexposed to this asset class and have been for many years.
What are you doing right now in terms of hedging the gold price?
So we completely unhedged. We like to think we're a little bit boring from that perspective.
You were always completely unhedged, or just now?
As of the 1st of July. We had to do some hedging to fund one of our growth projects, but at the moment entirely unhedged. And again, at this gold price, most of our shareholders want us to remain unhedged.
Do you mind silver as well?
Unfortunately not. But,
have you got a view on... it'd be very interesting, actually, given your incredible vantage point on gold. Do you have a view on some of the speculator money that is going into these products as well, whether it's platinum, whether it's gold, whether it's silver as well? Because, that's a very interesting area where a lot of our viewers want to know about as well. Yeah,
it's silver has obviously been trailing gold, and it's similar to the other precious metals, the likes of platinum also, where some investors might feel gold has run too hard, and they look for alternatives.